All right, we'll go ahead and get started here. How's everyone doing today? Hope you're doing well. Look at the NASDAQ as per usual. Sent out a rough daily bias for today. I'm looking for previous daily low as a short-term target, and then slightly past it, preferably down to this swing low as well. Still within this kind of weird consolidation reversal weekly profile, so I'm not rushing towards anything. I'm waiting on this 5 minute and the 1 minute to kind of give me what I want. Nice short-term run on stops there on the 1 minute chart, so I want to see if this can be used as a turtle soup. I have this minor buy side marked out here to see if he wanted to run up against that, but as long as we're starting to get some inefficiencies forming, I may take the first inefficiency that forms and run it down to that 23,298 level. Yeah, I already have this 1 minute SIST here with some displacement, so I'm liking it so far, but overall, I think the 1 hour chart a little bit easier to see. Bearish bias. We ran out the current weekly high, which we were looking for yesterday. Drops down, forms an inefficiency there, fills that, drops down again, fills that, drops down again. Obviously now we're starting to get some continuation. So looking for that ELL as a target, and then there's a 4 hour order block here at around 23,272. So I'm liking that as well if we can get down there. But if we can form this as a first presentation gap, I'd love to take it as a trade opportunity back down. Let's get our first presentation here. We'll screenshot this really quickly. I want to see how much it wants to run into this. See, that's SIST or the bearish order block is right in line with 50%. See if it wants to come up here and fill this and start to respect it, then I'll look for something. Let me see if I can connect this as well. It's running up into it. Just needed to touch this order block here. There you go. All right, now I'm looking so you can get a energetic move away from it. But short-term run on stops there, drops down with displacement, passes short-term swing low, inefficiency in its wake, trading back up into premium, into the order block, into the gap. So if we can get a nice reaction off of this. So I'm looking for a displacement if it wants to give it, and preferably kind of a, you don't need to see respective new order flow, really just one confirmation would be fine. So down to here will be 13 points or so. Let's see if we can get good closure all the way through. And I'm staying flexible today as well with my bias. I do realize we're still within this consolidation, so I'm trying to get that session range if it gives it to me. I don't really want to be trading macro to macro. So that's why I'm fine with sitting out some of opening range to let it play out if it wants to. But as much as it's giving me a good opportunity, then I'm going to take it. Morning, Creed. A down closing candle there, the volume bounce. This becomes your bullish order block. It's trading into it. You can kind of see on the lower time frame here on the 15-second chart, it's starting to build that higher resistance move up. So I'm willing to see. May come up and touch this too, but I'm just going to stalk on the 15-second chart. Oh, 5-minute order flow. Let's check that. It's all right. I mean, you can see the candle bodies kind of tell the story there. We got the 5-minute inefficiency up here. Sibi. 5-minute efficiency up there. It's trading into and for the most part respecting. Just no downside displacement yet. All right, comes up, tags a bearish order block and premium. Still feeling the inefficiency. I'm watching these candle bodies as well, printing and closing below consequent encroachment. And for me to get in the short, just need 15-second displacement through. But if it doesn't give it to me, that's perfectly fine. We'll wait. Macro time rolling around the corner here in 7 minutes. So on the 15-second chart, not important that you need to know this, but this applies to the 1 minute, applies to the 5 minute as well as a good tape reading tool, which is, obviously when I personally like to look for these kind of confirmation of reversal trades on a lower time, ultra low time frame, like a 15-second chart. Allows me to place my stop a little bit tighter than I otherwise could have if I was just taking a retracement entry. There would be times to take the retracement, times to take the run on stops as a turtle soup, and then times I like kind of an added confirmation through a SysD, through an IFEG, things like that. So selection of those specific PD rays is super vital in making sure that that's true. The retracement is over sort of thing. With these kind of entries on the 15-second chart, even on the 1 minute chart that I take these, where I'm waiting for it to retrace and then start to leave the retracement, we need to make sure that it's a proper, kind of level that is being used as, okay, now that's the end of the retracement. It's going to start trading lower, trading higher, right? So that PD array selection is extremely important. In this case here, this swing low, we have a fair value gap there, trades into it once, runs the stop there, and then forms a short-term swing low there. So this would be used as an intermediate term low. You could also use this one, both of which are intermediate term lows and therefore should be used as its true market structure shift. So when you see displacement through that, there's not really any clear, SysDs you can see through. Market structure shift is the first one that I look for, then SysD, then an IFEG in terms of strength. So that would be something you could be marking out. Same thing kind of with this as well, especially if you form this as a short-term low. So making sure you're training your eyes on those things, especially on a 1 minute chart, very, very important. But you can see we completely flipped through this first presentation gap. I'm going to come back here and zoom out to see we got SMT between NASDAQ and ES right now at the lows here and here. I'll pull this up actually. There and there you can see pretty clearly. So we're watching that. Back to a 15-minute chart over here. If we were to close above this, I'm going to be not concerned, but look at potentially flipping the bias. Do have that 5-minute gap too, right in here, the white shaded box. But it looks like a pretty clean inversion of this first presentation gap, run on stops, SMT at the lows. So going back to the 5-minute and stalking the 5-minute. Not going to go to 15 or 1 minute in here when you got conflicting data on the higher time frame. So it goes back to that top down. Now, I have a very diverse approach, right? I look for different models. I look for different entries. I'm flexible changing my bias, which is something that in the beginning is, to be completely honest, is not possible to do. It's simply just, you have to refine down one model enough to where you are confident in it. And then increasing the amount of models and increasing the amount of tape reading, right? So understanding the process at which you take to arrive to those kind of entries. When you have one model, it's very easy because you're just staying on the highest time frame. Then when you see something like there, you're dropping back down. Me personally, I'm looking for different models, and at different times I'm looking for entries. So I'm repeatedly going from higher time frame down to lower time frame and cycling back and forth until I feel like it's good enough of an entry, right? You have your higher time frame up here, and you have kind of these steps as we go down. So this is important because it's not something that you really necessarily can teach. It's more of the flow of things. But obviously you're as you go down and down, this is your entry time frame. But you have kind of one last safety net in here, which is typically mechanical, that allow you to drop back down. So if you get to this time frame where there's nothing in there that you don't like, then you have to go back up to here. Sometimes you have to go all the way back up to your higher time frame and do a full kind of analysis to figure out what's going on. So in here, I'm watching the 15-minute chart, looking at that potentially as a change in state delivery. It's a very weak one though. Now we've got wicks up in here and not a clean candle. So I want to see how this 15-minute candle prints. We've got macro time rolling around the corner, as I said before. It's obviously coming further back up into the range. What up, Nathan? Yeah, hopefully early weekend. It's looking like it. Ew, what the heck is this ES price action? My goodness. Yeah, decoupling too. Yeah, consolidation, trade up, trade down. Check DXY. Tuesday, Monday. We got previous weekly high. Up here. Nope. Yeah. That'd be one. And 15-minute chart looks decently bullish. So it should be bearish on NASDAQ, but I mean, it's still within this consolidation range here. You got an ERL. I don't know. It looks like it's going to consolidate, to be honest. I have to guess. Gun in my head, I'm going to say this is bullish up to this swing high. Still got this relative equal high as you're looking for. But if I had to say, it's probably going to consolidate. $9.50 dropping into the tiny inefficiency in here. Plus the low, high, low, low, the form of the SMT. So you got a breaker in here on this candle here. 935. Got the minor buy side. I mean, yo, what up, Yum? 15-minute chart, 5-minute chart, 1-hour chart, all looking bullish. Yo, shout out Creed, man. So finally on the 5-minute, you got an inefficiency forming. It's a little bit within this kind of balanced price range, so I'd prefer if this entire thing was left open. I want to see if we can get this breaker to be reclaimed. You can see the 1-minute chart between this low and this high, this constant working back and forth. I would have liked if we as soon as we close above the first presentation gap with this candle, comes back down, touches the order block, that should be in a completely balanced price range. In here, I would have liked to see a gap up through that. We have a tiny one there within the breaker, which is fine. I like to see a gap through the opening price of the breaker. Just makes it for a clean unicorn. This blue line up here is Asian high. That should be the current weekly high. Yeah. 47 points. I'm liking that 4-minute gap. I'm going to watch this. 4-minute fill that. I love that. Yeah, so this 4-minute gap should be used as a breakaway. So within this balanced price range. Obviously, within a lower time frame, it's all pretty balanced within there. So you're not really looking at this 944 candle to be traded into. I want to see if this 127 left in this candle, if this can close and form a gap here. It trades into that gap, gives me a 1 minute or a 15-second SysD out of there. I'll take that long up to. I'm liking Asian high. I can see the original consolidation in here pretty cleanly. I can see the original consolidation in here for the most part. It's not looking too bad. We got a new week opening gap up there as well. So we'll see. Are you on the subway right now? Bro, why is that a screenshot from your phone? Right. Right. Mm-hmm. Yeah, we know. Don't try to play the fool with me. And he just dropped an album. Default settings. Let me see if I can find that GIF. Don't try to play the fool with me, Nagesh. It is very bad. There's a bomb strapped to my chest. Alright, we meme too much. Alright, so we did get the 4-minute gap in there. I want to see if we can come down and fill it. I'm watching the 15-minute breaker as well. 5-minute 2 looking clean. So we got 2 minutes left on this candle. Rough stop. What the heck? What did I just do? Do not redeem. Yeah, still got this over to block with the 2-minute gap, so I'm watching, or 4-minute gap rather. So I'm watching if you can drop into there. It would be beautiful. 957, come back down, touch right in here. Preferably the gap with the order block. Get a bunch of crap marked out here. Wait. Yeah, it's fine. But yeah, 5-minute looks pretty healthy now. 1 minute, same exact thing I'm looking for to drop back into. These two still offer me a retracement entry. And if it doesn't, no big deal. Now, if this was an extremely high probability day, I would have liked taking this order block here. With the 3-minute gap, I'm probably just taking a confirmation off of here. If we got displacement in a kind of a retrace into this gap, I would take it on a high probability day. But I mentioned yesterday that since we're still stuck in this consolidation reversal profile for the week, and the nice went on Tuesday for me personally, I'm not forced to take anything. So I'm going to demand ultra precision in these levels. What I'm looking for, I want very specific things. So if it's not going to offer me that, because it's too strong in this case, I'd rather wait for it to kind of give me what I want than take what's being offered in this case. So, I mean, in this case, like high probability days, got a bullish order block there within the breaker, comes back down, fills the inefficiency slightly. I would have liked if we had a gap above the order block, trade it back into it. And then as we trade away from it, that'd be a nice continuation entry with the stop at the low. But I want that 4-minute gap to be filled. It doesn't look like. Do you have a 3-minute gap? A 3-minute order block. 2-minute. And obviously, as it's getting further and further into premium, I got to be careful. So technically, right here would be premium. Or I guess right around here. So as it runs through London High, let's see if we can get a discount retracement. Yep, that's what I'm looking at. I'm trying to get a continuation entry. I don't really want to be waiting for up here You know, this is a silver bullet zone between -1, -1.5. I mean, it'll be in line with the Asian high, which on a higher time frame would be a breaker, right? Now, I don't know if I'd love that. I'd favor an entry below London high, somewhere in here. So this is a premium array. So if it runs that, it should offer a short-term discount either within this gap, or if it wants to run back down and take out that low, that's what I'd like. Oh my gosh. What in the heck is that? Yo. That is disgusting. That's nasty. Yeah, that kid in that GIF Loki looks like Naden. Nah, facts. Here we go. I would have cheese necked you if I saw you on Saturday. Yeah, I'm not. All right, this time I'll take responsibility for it. This time, but the other 30 times is your fault. No, bro, you leave me on red. I'm thinking the breaker, but I want the gap with the breaker. If it was a high probability day in my eyes, then I would like the breaker. But I'm not going to be longing it within the breaker without the inefficiency. And we got 15-minute breakers all over the place, so. Yeah, exactly. Yeah, we got the M5 breaker. We got one in here. I don't really want it to come back down all the way into here. Order block kind of is that last. Look at the 4-minute really quick. You got the 4-minute order block with 4-minute gap. So if it wants touched down into this in my eyes is a breakaway gap. So there should be no reason it really should touch into it, let alone 50%. But to me, it looks like it's generating first stage right now. Right, you normally have that consolidation, right? Smart money reversal, low risk buy in here, and then it goes low risk buy, and then consolidation, sweeps the consolidation low, total soup, and then you have the second stage of reaccumulation before it runs up into the buy side and the -2. So I love the fact it's consolidating here. If we can get a soup on the consolidation low, that's what I'm liking. The stack limits. Yeah, so it's just going to consolidate within here. No need to panic, no need to worry. Don't try and force something. I'm just going to wait for it to either close above one of the other sides. But either way, we should have an entry. You know, consolidation, if it wants to form a nice mitigation with the gap, could take that. Otherwise, run on the stops. Let me screenshot this actually. Wow, that was quick. Heck. There's a short-term run on stops. It wasn't the run on stops. Not seeing enough movement. Wait, I'm like, I see this run on stops. I got the tiny gap there. It's use this inversion, but I'm still waiting. I'm not gonna get baited by a internal run. Either the mitigation up here, if your value gap mitigation entry, or the run on stops down here, and then assist D out of that. Yeah, same. I'm not trading the last ditch on this day. So it's either silver bullet at this point or nothing. Just patiently waiting. This is why you have to derive satisfaction from process, right? Not outcome or expectations. You come into a day like today, you want to take a trade, you're going to take a trade. If you come in today and just understand that you're an observer of price first, and then you have to wait for it to come to you. If you're constantly chasing the market, it's going to run away from you. It's going to offer you terrible entries. You're going to be the end of the train, right? You have to be in front of the market, meaning you have to let the market chase you. So if I want this criteria, if I want this, if I don't want this trade, it's always going to be offering me setups. That's the mental framework you have to have in order to trade successfully. But if you get no trade, doesn't mean that you didn't work today. See you, Nathan. The work in trading is patience. So you get paid to sit on your hands, right? You get paid to take a trade. You get paid to lose in some sense. You're turning over profits in the long term, not the short term. So it sometimes doesn't feel like work, and it sometimes feels like just because you showed up, you think you're owed a trade, you're owed to get paid. It's not true. So you are getting paid over the long term, and sometimes you get paid today to be patient, to sit on your hands. So if there's no high quality setup that catches your eye, nothing that meets your criteria, if you're just trading the macro time's finished. So if you want to taper the rest of it, that's perfectly fine. But don't let temptation sit in. And if I take a trade potentially, or if you see someone else take a trade, or if you see maybe a high quality trade play out, don't let that make you break your process or break your rules. Trading is one of the only things that will reward you in some sense in your brain for being undisciplined, right? You can take a stupid setup, you can break your rules, and very occasionally do you get paid for it and rewarded for it, right? You're never going to get paid and rewarded for letting your kid run out into the street every once in a while. It just seems like a stupid idea, right? Just play with fire. Say, okay, this time, next time if there's, I'm not going to let him, but this time I'll let him run out into the street and see what happens. What? You're risking so much, because if that doesn't work out, you're going to spiral out of control. So you have to constantly be checking both sides, constantly staying on your toes, constantly staying disciplined. That doesn't mean you have to be perfect. It just means that you have to be very aware of the possibilities of different mental gymnastics you have to do to stay protected mentally and obviously physically in your capital. If you're unable to do that, then you have to sit out and turn off the charts completely, right? So if you say 950 macro is your model, you don't get an entry in here. Maybe you did get an entry. Say you didn't. You have to ask yourself, honestly, am I going to be able to taper the rest of the session without taking a trade? If the answer is yes, then you can do it. If the answer is even hesitantly no, or hesitantly yes, right? There's not a blatant, outstanding yes, I'm fine, then best to sit out. And it's not a knock against you. Just honestly, You just wait for 2 hours. 2 hours and the answer key will drop. Sometimes we get so absorbed with trading that it becomes our entire life, when in reality, you did this for the freedom of it. So do your job for the day, get off, go live your life. Charts will be here when you come back. You figure out your mistakes, fix the problems you maybe have along the way, and then that's it. Right? There's not much more to it. Sometimes we overcomplicate it. You just sit in here, you do your job, and you leave. That's all we want it to be. So we just ran out the London high. I'm trying to see if we can get a retracement back into the range, or if we can get a gap formation up here. On the 2-minute right now to see if that gap's going to form. A tiny one in here. Whoops. Tiny one. What do I keep doing? Resetting the chart? Take out the new wick opening gap. It's also a good time probably to do a mental checklist, right? How do you feel? Do you feel anxiety? Do you feel like you're trying to force a trade? Do you feel like you're calm and at peace? Does it feel like you have something you're scared of, fearful of? This is why, as you're developing your model, you should have a journal, writing down kind of how you feel and what you're looking for, right? So that way you're able to spot those kind of mistakes and potentially flaws in your psychology. So we just touched that bullish order block in the value gap. I want to see if we can get some sort of displacement out of it. We're right around the threshold that I don't want to be taking a trade. So price action wise, not time wise. Time wise, we still got plenty of time, but price action wise, I want to see we're just barely in discount of that implied dealing range. So anything above really the London high, I don't really want to be taking. But if we can get a nice reaction off of this for value gap plus order block, then I'll consider it. USMT at that low? Oh, not really. Oh, we do. Okay. So I'm watching this little area in here. This is on 1 minute perspective. Daily fair value gap. Yes, this wants to pick its nose. That's what it wants to do. But I don't know if it wants it today. It makes sense, to be honest. You got a nice original consolidation right above it, so I would love for it to drop into that. Do I think it's going to do today? Probably not, based on what we're seeing. Two-minute gap forward with a 2-minute order block. I like that. Still didn't get any purge of the consolidation low. I mean, at this point we can rely on time of day as well, right? We got 10:30 confirmation of the New York Open reversal profile as we tag the London high and form the low there at 9:40-ish. So be reasonable to expect that 10:30 is the draw on time for today at a minimum. So we can start to shoot for that, and that kind of gives us an extra confirmation that this high up here is obviously formed prior to there. So if we can get any sort of 1 minute run on stops, 1 minute for value gap to print and hold, then I would love to take that. Do you have this 5 minute weak order block? Weak because the fact that we have larger wicks on both sides, and also the fact that we have no displacement through the opening price as well as the upper end. So you look at this as just kind of watch to see how it's going to hold. If it does hold, it's great. You don't really expect it to do much, and if it doesn't, it's not a huge problem. But my focus right now is down at these lows, these relative equal lows. If you can come back down and soup those, that'd be great. Just obviously still got targets up here and up here, so still room to run. Just consolidating here in silver bullet. Yeah, nope. When you cycle time frames here, you can clearly see, at least on the 4 minute and the 3 minute, still within that consolidation, right? You're looking at the candle bodies. So one of the hardest things about displacement or about consolidation is that there's fair value gaps that form within the consolidation range. So if you're not accustomed to what it looks like, you're going to get tripped up by the fact that there's going to be gaps here, 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 and here. It's going to be gaps on both sides. And that's the tricky part, is the fact that in a normal price action, if we're expanding or retracing something like that, those gaps are sometimes entries. Meanwhile, in a consolidation range, it's either going to stop you out or you're going to get wrecked because of the fact that you're taking every single fair value gap entry within there. So only two ways that consolidation can be broken and left. Obviously, we know that expansion follows consolidation every single time. It goes from consolidation to expansion, right? Then expansion to retracement or reversal. But the only two ways that it really can leave that consolidation is either like this, where it purges the external range and then reverses, or if it will just continue out of that range and offer a retracement entry off the top. And this is why bias is extremely important in this, and understanding where consolidation can form, right? You normally see the first one over here when this is a key time, say maybe 9:30, and this is a true turtle soup, right? We have a higher time frame PD array up here. You have a original consolidation right below it, and then it runs that consolidation, digs into the higher time frame PD array, key time, SMT, turtle soup, right? Trades away from it. Meanwhile, this one is normally seen not at the reversal, but actually within first stage of reaccumulation. You can see the second one in the first stage of reaccumulation as well, but this one's a little bit more common because of the fact that, especially if there's short-term momentum SMT at these lows, or if it doesn't even want to come back and run these lows out, like we see here, you'll see something like this. So either way, the way you want to be looking for us to leave consolidation, if you're struggling with that, look for the consolidation high and low to form, right? You mark out both ends of the range and you look for displacement through one. Then you look for confirmation of new order flow. So displacement through the consolidation high or low, a gap forming, fills the gap, respects the gap, and then goes back for the new swing high. That will be a beautiful indication of the fact that it's most likely now leaving the consolidation, and you can start to trust any sort of supporting PD arrays and potentially use that as a trade opportunity if that's your model. Otherwise, if you try and pre-fire where that consolidation range is going to end, you're going to end up getting stopped out a whole lot more times than you feel comfortable. So learning when consolidation is going to form is a harder skill than kind of seeing it. When you see it go up and back down, up, down, up, down, obviously not moving within a range, moving outside of the range. You see those gaps forming back and forth, etc. Then you know, okay, it's a consolidation, right? And I do not want to be trading consolidations. I can trade expansions, I can trade retracements, reversals. I cannot trade inside of a consolidation on a lower time frame. Higher time frame, it's doable, right? Because then you can have these intra-session moves. But on a lower time frame, trading inside a consolidation is asking to get burned. Day like yesterday, for example, I did the market review. If you want to find it, it is in the models and reviews section of the private group. You can go back in and watch that if you want to. But yesterday's price action, in my eyes, was a seek and destroy profile. No clear one-sided direction for the day or for the session, and it's this constant back and forth, up, down, taking both sides of the stops. You see that going into the session, you see that after the session and during the session, where there's not much in here that, in my eyes, is one-sided and obviously tradable. So I want to be avoiding those conditions under any circumstances. Obviously, we got that loss from yesterday that we took on stream. I took on stream. And it is one of those things where you have a stop loss for that reason. You may be a wizard at trading, but the off chance that you either spot it wrong or you misidentify the day as high probability or low probability, or you get stuck in consolidation. Sometimes you won't know the consolidation is there until it's done, right? Until 2 hours after the fact or 1 hour after the fact, you say, oh, that entire session was consolidating. You're not going to know that in a trade, and you're definitely not going to know that after you take a loss when emotions are about to fire off and you're right on the edge of overtrading. So the best thing you can do is simply sometimes just to sit out and accept the loss and accept the responsibility, because that's protecting you from something that you cannot see right now. Reason you have a stop loss, reason that even good traders, take breaks and skip out on days, right? I didn't trade Monday. I don't want to trade Wednesday. There's certain days that I skip because the fact that, number one, I don't need all those days. I don't need to trade Monday through Friday, and you don't either. And number two, the fact that I will lose more commonly on consolidation days than I will on clean expansions. That's why I focus the streams. That's why I focus on myself on days that I'm clearly able to see that session move. I can see where the entire session is going from 9:30 to 11 o'clock and onwards into lunch. I have a much higher probability chance of taking a winning trade. I cannot trade in lower time frame consolidations. Like this mess in here, if I go to 15-second chart, I'm asking to get cooked. So the best thing you can do is just zoom out, wait for that consolidation to be done, and accept the fact that sometimes there is some price action that we cannot see. You can try and price project when it's going to leave the consolidation. You can try and time project, meaning you can look for PD raise, you can look for time of day, etc. But consolidation is built to kill noob traders. It's the whole point of it. The whole point of it is to generate liquidity, right? You got liquidity on both sides of the market. The impatient and the ones that do not know what they're doing will be stuck inside of this. This is just, consolidation is built for retail traders, right? The smart money is not trading in a consolidation. They're waiting for that consolidation to leave or to purge it. So the consolidation itself is generating liquidity. We do not want to be in liquidity generation. We want to be in liquidity sweeping, right? When those limit orders are being filled, energetically spooling, not this. So consolidation will then build anticipation and sometimes pain within your brain. Especially if you're waiting for a setup, right? Like in this kind of scenario, we're approaching 10:30, still looking for higher prices. It's very easy for someone who's new or maybe someone who's seasoned to be, as soon as it leaves that consolidation, they get in a trade, even if it's not good. Because of the fact that that entire time, like right from here to here, about 30 minutes, we've been sitting here and it's been in consolidation. So the best thing I can suggest to you is as soon as you spot we're in a consolidation, just try and turn your brain off. All right, I do that. You saw me typing in chat and talking with my friends and stuff, but I try and turn my brain off because there's nothing in here that requires me to tape read it. All right, I mark out a certain couple of levels and I watch it, but I'm not going to be using and burning up my mental capital. Okay, I want to save my mental capital to where I'm getting in a trade and I still have enough to manage it, right? You got to have enough capital to, number one, get in the trade, and number two, to deal with whatever the outcome is after the fact. If you have enough, say it takes 10 points of mental capital to get in the trade. If you get in the trade and you waste your last 10 points, what are you going to do with whatever the outcome is, right? If it's a win, you're going to be overhyped, and that's going to cause you to swing back the other way probably tomorrow. Or if you lose, it's going to cause you to be extra down. You don't want either one. You want flat, unresponsive, accepting the responsibility and dealing with the outcome, right? So in a consolidation range, number one, just be aware of the fact that as soon as it leaves or gives you a signal of it leaving, do not jump into something. Wait to see if it wants to give you extra confirmation and then take that, right? I had marked out this gap here. I marked out the order block, see how it wants to react, how it wants to respond. Just want to do that and it comes back inside the range. Boom, I'm back to turning my brain off. So within here, I'm still looking at price action, but I'm not going to be tape reading it. I'm not, oh, is this the move? Is this the move? Is this the move? Every single time you do that in a consolidation range is when you get burned. So let the move be the move. Don't try and, predict it in a sense. There's sometimes where you have to pause. Sometimes you have to just wait it out. And if you've not developed that kind of patience before, it's going to be very uncomfortable, especially in a trading environment. I could not sit in a trade for more than probably 10 minutes before manually closing it out, just because the amount of pain and an uncomfortable feeling it would give me was just too much. And now I'm at a point where I can sit in a consolidation range for 30 minutes or an hour and not take a single trade if it doesn't look good enough. And if I were to take a loss right after it, be perfectly fine. So if you're in a position where this is uncomfortable, that's fine. It's normal. It's not something to be worried about, or the fact that you think you're lagging behind. It's perfectly normal. But you have to take steps to improve. So understanding how consolidation works both mentally and on the chart is very important in beating it. There's always that double-edged sword in trading, is you have to understand the mental side of things and the technical side of things. You cannot have one without the other. You will not have true understanding without understanding both sides. So any sort of psychological advice or video or whatever that you see has to directly be paired with the technicals. Same thing, vice versa. Any sort of entry model, any sort of whatever in the technicals also has to be paired with psychology, both in understanding and in what it's going to do for you potentially if you decide to make a decision, right? So understanding, okay, consolidation is building that anticipation mentally, what it can do for us mentally in terms of sometimes taking bad trades as soon as it leaves. Okay, we accept that. How do you get rid of it? You just simply believe something else. There's nothing much more to it other than the repetitive practice and putting into action of those thoughts that it becomes automatic. So you have to constantly have that injecting logic. So in a sense, I try and act as that injecting logic, where anytime that I may have a thought that pops up, I'll say out loud kind of what I'm thinking and what I'm telling myself. So all of this in here, this entire segment I just went through of the consolidation is the reminder that I tell myself. So anytime you may have this kind of scenario show up, and this will happen probably on Monday in some scale, you need to have those sort of statements and logic that you tell yourself. So you're just reassuring and reaffirming the fact that nothing is wrong, number one, and number two, that you're a good trader in some sense, right? And that you, for whatever reason, do not need the setup, or you do need the setup, or something that goes along with the technical and the psychology. And that way it becomes much easier to understand how to counteract kind of those negative impulses. It's always an impulse, right? It's an impulse that comes in your brain. The more time and energy you spend on that impulse, it grows into this monster that eventually affects your behavior. So as soon as you have a sword and a shield that then can counteract those impulses, then you actually are putting up a fight against your subconscious. So when I say, stop loss is there to do its job properly, it's very usable injecting logic. So then at any time you're trying to close out the position before it touches the stop loss or move around your stop loss or whatever, you got a stop loss for a reason. And the stop loss should not scare you. Right? It's there to protect you. It's like it's the safety net. It's the parachute that you designed. I like that analogy because it's, you know, if you're skydiving, the number one fear you have is probably the parachute not working. But imagine you are in a very risky environment like this, and you have a parachute that you designed. You know where you're going to place it. You know that it's going to work. You know that the risk you put on in the first place, you're not going to die, right? You're going to get a little scratch. So understanding the mental game of it is 90% of trading once you have a developed model. You can trade easily, I think, at that point, but it just becomes a mental game of understanding what's there, what's not there, what's real and what isn't, right? Sometimes we place too much emphasis on getting out a drawdown or doing whatever. We place so much thought on that instead of what do we actually have to do, right? What can you control? Okay, drop your risk, take good trades. That's it. There's no more thinking that needs to be done, right? You got a good risk profile. You got a good model. Understand, okay, if I use this specific risk profile, it's going to take me 14 losses to blow up my account in a row, right? And then potentially maybe if I take 3 losses, I'll cut my risk in half. So now the total amount of losses is 25. Okay, well, I know that's probably very improbable for it to happen, right? The chance of you taking, what the hell? The chance of you taking a 5 losses in a row with a 70% win rate is around a 0.2%, I think. I could be wrong on that math, but it's very rare, right? It's very rare for that to happen. So when you understand, okay, the risk profile that you're using, the model that you're using, there's not much more thinking that needs to go into it. You just do, okay? The more that you think, the more that you try and tweak it, the more that you think that how long it's going to take to get out of drawdown, or do you have to fix something? Maybe you sometimes do have to fix something, but you know, it's as much as you put that out of your brain, then that's the main thing I would say to focus on. And you probably felt that spike in your heart rate too. I felt it too, right? You see that energetic candle print up, probably spikes your brain for a little bit, but calm that down instantly, okay? Feel a little spike, leaves in the consolidation, you think, as soon as that happens, it's like an instantaneous thing. Feel, oh, it's leaving without me, or now it's going. Wait for the candle to close, see what's going on. All right, still gotta wait for a fair value gap to form. It's not gonna do it in one candle. Need 3 at a minimum. Look for a setup, right? So on 15-second chart here, we can start to look for if there's anything in here. A fair value gap printing. I want to see if we can actually use this bullish order block, and I'll take that. But now we got time not on our side. Not meaning not on our side in terms of it's a bad idea, but we did form the new high post 10:30, right? So there's your entire session range. Meets the time requirements, doesn't meet the price requirements. Let's go back in and look. Is it? Let's look at what is it doing. So on the 15-minute 1 hour chart, okay, it's potentially running stops here. You could argue it's going from an ERL back to an IRL. So we're looking for a 15-minute POI in premium, which we're trading into right now. So potentially this meets both the price and time requirements for the high of the session. You're looking at a 1 hour chart perspective and a 15-minute chart perspective. So if this is a 1 hour run on stops and forming the 1 hour low of the day, and this is a 1 hour ERL, you're looking for one time frame lesser than the manipulation target. So your manipulation target is one time frame. Your distribution target is one time frame lesser than your original time frame. Very useful gem there. Probably going to go over some people's heads, but that's how you find, especially when you're using the session, very precise targeting purposes. Obviously, you can use the market efficiency paradigm to drop back down and refine it. But a simple way of looking at it, obviously, is the 1 hour chart and the 15-minute chart. So if you understand, okay, we got a 1 hour ERL, we're looking for a 15-minute IRL in premium for us to target. We got one there, we got one up here that we just traded into. We do have this target as well, which still exists as a potential opportunity, but we just have to be mindful of what's going on in here to see if it wants to give us any sort of opportunity. You can see the candle bodies are still closing kind of within that consolidation range, but that looks a lot healthier as you zoom out on the 2 minute, 3 minute, etc. Tiny bullish order block there. I still would love to see this used as a breakaway gap if preferred. Right. Just the tiniest portion, you can see the order block with that. That's the inefficient section. So at an absolute maximum, I'd love to come back down into there and potentially give me a setup. But like if that entire opportunity or entire gap is used as a breakaway. So price, requirements, also met. Looking to see and get one last continuation to Asian fib projects before hopping off. Boom. Let's see if we can get it. Come back down into, this is a 2 minute gap. 2 minute, oops. 5 minute, you can see it's a little icky there. Yeah, you look at the candle bodies, right? Candle bodies are still kind of stuck within this. Still giving us a bullish indication. But the wicks there are throwing it all off. So it's already touching the contact encroachment of the breakaway gap and digging further into it. So do I want to be trading it? Probably not. Unless there's some energetic run that happens right now. But to me, it's building into this is the high. And that's it. ES is start. Oh, ES and YM are finally both pumping up. 23, 24. There's not much in this. ES looks a bit healthier. That's what I want to see on ES. On NASDAQ, rather. You can see still within this consolidation range that we're seeing as the first stage. No external purge on the lows. Which around 50% of the implied dealing range, you do want to see that consolidation low ran out. And it kind of uses a Judas swing. This amount of liquidity down here not being ran out makes it very weird to take, longs further and further up into premium. Because the likelihood of that being swept out and then going back for the highs is higher, I think, than leaving it and then coming back. Look at the 15-second chart, though. Look at this mess. To be honest, there's just not enough volatility for me to get anything, I don't think. It's just still staying within this. nasty range. And yeah, this is, like I said, this is kind of, we assume this to potentially be the session high. So, and I mentioned earlier, I just want to look for entries probably below London low, or London high rather. I see that as the dealing range discount. So I'm trying to decide whether or not I want to wait for last ditch. I don't really want to. Because it feels like one of those days where I'm gonna end the stream and then we're gonna get the move. So I mean, you can see it's really back to like 50% of this entire range. Maybe it's above it, but it's just so meh. Yeah, I'm not dealing with this, to be honest. If it does give me a 1050 macro, I may watch it off stream, but you're bored, I'm bored. Nothing much more we can really do, right? Sorry to kind of give him us a move. I mean, in hindsight, maybe I looked at the 950 macro entry within the breaker. As an entry. If I was bullish coming to the session, I would have liked the first presentation gap, like in here. I was bearish coming into it, so that's more of a hindsight thing that I could argue. I'll come back into it, look for as to why I could have been bullish coming to the session, but other than really, it's a consolidation day within a consolidation week. So, anyways, this entire thing was recorded, so if you want to go back in and watch it, you can. I'll post it later today. If you got any questions, let me know. I'm probably gonna watch it for the 1050 macro just to watch it, but I don't want to bore you anymore. So I'm probably just gonna be very silent, just watching and just learning. So hopefully this week was not too bad for you. I know it's kind of rough past couple of weeks, and we've just been stuck inside of this chop on the higher time frame. Makes it very hard to get a bias. Makes it very hard to even get lower time frame setups. So make sure that tomorrow or the end of today, that number one, you're going through your journals from this week. Read through all of them. Number two, you're going through the technicals, making sure that if there's something that you want to create, like a consolidation, higher time frame consolidation bias method, like how do you find a bias, or what's the bias that you want to be looking for, and the things that you want to be looking for within the consolidation ranges. Normally, it's going to be the same as good PA, just on a lower time frame. So I can't really go up to a 4-hour or a daily as much on a consolidation week. It's going to be more relying on the 1 hour and the 15, but sometimes having a flexible bias and just letting the opening range play out is really all you need to do. But yeah, make sure you review the journals, review the technicals from this week, see if there's anything you can improve on. The weekends for traders are to review on Saturday, and then Sunday to plan ahead for the following week. All right. So take it slow, take it easy, relax, rest. The week is finished. Plenty of stuff to learn from. If there's anything that happens, I'll do a market review, but for the most part, I think it's not terrible price action to go through. That market review from yesterday is posted. So you want to go through that and watch that, you can. Tomorrow, if I have time, I'm going to create the there's a video I was supposed to do, I think, for high wags. So I'm gonna go through the video list. There's something else, so I may record one and then edit one up for next week and get that popping. All right, so journal if you haven't already, and do the things that are necessary to succeed. As always, hopefully you learned something from today's price action. If not, that's all good. But take care the rest of the day, and I'll talk to you guys soon. Peace.